How's it going, everybody? It is Dennis, and we're back with another video, and today we're talking about YMAX, YieldMax ETF, the fund of funds ETF that has all their different ETFs into one main ETF. Lots of ETFs, ETF. But yes, we're talking about YMAX, and before we get to YMAX, I just want to thank everybody for 1,000 subscribers. We've hit the 1,000 subs. We're continuing to grow. Thank you so much, everybody, for the support, and let's get back into the video. So, YMAX, why am I making a video about YMAX? Well, I want to talk about the diversity of YMAX. So, yes, YMAX is seen as a safe fund from YieldMax ETF, and it's because it is diversified. A lot of people enjoy investing into it and think it's a pretty safe investment, or a safer investment than the regular, single stock or underlying stock ETF. Then like Apple, TESLY, Nvidia. It's safer than that because it's diversified. But I have an issue with that. The issue is over-diversification. I can't say the word today, but over-diversification. I don't think it's the greatest thing. TSLY ETF, not TSLY ETF, but YMAX has a lot of different funds in it, with TESLY's being one of them. As we can see, these are just some of them that are in this ETF, and there's a whole list of them. It's pretty much all the funds that are on the list besides the reverse funds and the new Airbnb funds. We have AIIY, or the AI one. We have AMD, AMZ, Apple, CONY, Dizzo, Meta, or Phoebe. We have the new GXDY. We have GUI. All these ETFs we see on this list are on this ETF, and I don't think all of them deserve to be on it. Some of them just don't need to be on it, or maybe if they are on it, maybe we have too much of the same category. So what we're going to be doing is we're going to be going over each of the funds that are on the YMAX ETF, and my opinion on them, which ones I think they should get out of the ETF, because I think we just have too much of it. So I made this little nice graph we could use. Let's go ahead and zoom in on it so we could go ahead and enjoy our time with it. So let's go ahead and zoom in and start. So we're going to be rating all the YMAX ETFs, or the underlyings in the YMAX ETF, which are other YieldMax ETFs. We're going to be going through them, seeing which ones I think should be on the ETF, on the YMAX ETF, and which ones should not, what we should cut out, what we should add in, and just overall, what are my thoughts on these ETFs. So firstly, the one and only TESLY, the number one TESLY ETF currently is at $15, roughly around there. Tesla has had a little drop today, or this past week, just due to its earnings. But year to date, or to the max view of TESLY, it's down negative 62.54%. And in total, it has paid $12.12 annually. This is an average, of course, based on this past year. The past $12.12 annually is what TESLY has paid, and it's lost 62.54%. Of course, that 62.54% is not including the dividends that you have earned. If you take it out in cash, if you have reinvested it, whatever you do with it, that's not including the dividends. When it comes to TESLY, it is definitely not S tier. It has lost a lot of its value, and it seems like it's reached the bottom, at least with Tesla being able to sort of recover. Of course, these funds don't recover as fast as their underlyings, but it seems like it's sort of got into that stage where it's at its bottom, or so we think so. So with TESLY, I'm not putting it in S tier, but I'm definitely putting it in A tier. A lot of people might disagree with this because they're like, oh, negative 62.54%. I think it was just a bad time for the fund to come out. Tesla was going negative. It was a long term of negative for Tesla, the underlying, and therefore TESLY had the same negative. But at least we got a dividend payouts constantly every single month from the fund, which kind of made up for the fund losing value. Next up is OARK. Straight out of the bat, putting this in D tier. It's kind of meh. It's literally just has Tesla in it. We don't even need to go over it. We could take a look at it really quick. If we go to OARK, we can see it has lost 46.20% and has paid $4.82. So it is roughly 10%, or maybe let's say 20%, 15 to 20% away from being the same as TESLY when it comes to the loss, but paying 3 times less than TESLY has paid. So I don't know. I don't think it's worth it. It holds a lot of Tesla. no point of holding OARK. If you want to be invested in Tesla, the underlying, just invest at the TESLY, and you have yourself your Tesla investment. Now, moving on, we have NVDY. So, NVDY has been a great performer. NVDY has given a lot of people good dividends and great growth as well. We looked at the max chart, we can see it's up 30.28% and has yield $16.96 annually. It's a really good fund, don't get me wrong, but the underlying, personally, I don't see long-term experiencing such good growth and having such high dividends. The volatility is going to fall off. The AI bubble is going to die. It's already dying. We can see with Google and Tesla, they're having issues with AI. And we can see that Google had a really bad issue with AI because they had a huge sell-off after its earnings. And they even admitted to it. So, to say that Nvidia is S tier, I would be lying to myself. Is Nvidia S tier in this time frame? Possibly. But we're talking about the future of YMAX and when they're adding more funds into it and the overall diversification aspect of it. So in that sense, I'm putting it A tier. I'm putting it A tier, and I know this is going to piss a lot of people off once again, but long term, I do not see Nvidia bringing these results that we've seen so far. And we can see it already. It's dipping downwards. We maxed out at 30.51, and now we're dipping downwards. Dividends are also, I'm pretty sure, or the dividends are actually staying pretty good, $2.40. I'm lying on that one. But I don't believe the volatility is going to last for that long in Nvidia. That's a personal belief. You can think otherwise, and you can invest in this fund, and you might think it's S tier, but I don't see this fund lasting as long as people are wanting it to, and therefore people are still investing into it, and therefore, I don't know. I just don't think it's going to last. But A tier it is. This should be in the YMAX funds. It's quite diversified, or not quite diversified, but it's a good fund, and that's why it should be in the YMAX funds. Next up is Apple. We look at Apple. Apple is a fund I've talked about and I'm personally invested into and continue to invest to because I think Apple has a lot of places to go. Apple has a lot to grow and is paying good dividends from the Apple side, and it's also had decent growth in a way. It's in negatives right now, but I invested it when it was a little bit lower, so technically I'm at positives. But it's down negative 11.73% on the max graph, and the dividends are $4.50 annualized. Not too shabby, not the best. Of course, it's similar to OARK, but with less negative or less loss on the downside. So negative 11.73%. Apple, for me, of course, I love Apple. I think it's going to go a lot of places, but Apple is probably B tier. I think there's a lot more for it to go. I think Apple's going to continue to grow, and they're going to continue to, advance their AI, even though AI bubble is going to pop soon, but they're adding AI in. Apple's always going to be around. It's a brand name. Everybody loves brand, and brand will always survive. Next up is AMZ. AMZ is another good ETF, and I personally am invested in as well. AMZ is up 1.76% on the max chart, and the dividends it has paid out so far or annually is $7.20. So $7.20, 2 times almost of Apple, and has experienced somewhat growth. We are on a downtrend because Amazon is experiencing a downtrend, but we're at 1.76% growth on the max chart, and we have good dividends. For me, this puts AMZ on the A tier. By the way, end of this chart, when we put everything up into the chart, we're going to go over what I'm going to cancel out and why I'm going to cancel out, and also the reason for it. So just stick to that. All the cancel ones are going to go into the F tier, and I'll give my reasons for why. So AMZ, 1.76%, dividends, $7.20. Now, looking at Meta or Phoebe, if we look over to Phoebe, I'm pretty sure that's what the fund is called. Yes, it is. So, Phoebe, looking at the max chart, is down negative 14.55%. As you can see, we've experienced that downtrend since February. So it was doing quite well until that point, but at the moment, we're at negative 14.55%. And the dividends paid so far are $8.61, and they've continued to trend downwards. It went up in February. That's when we had the uptrend, and now it's going back down to what it was, similar to previous years. So down 14.55%. Underlying is Meta. Once again, I think this is a B tier just because Meta has a long-term lookout, I guess, or I believe at least it has a long-term lookout because it is Meta. That's the underlying. It has a lot of products. Again, it's a brand name. You're never gonna stop using Facebook. It might die out, but it'll still be there at least for a long amount until the generation that uses it dies out, and that's gonna be a while because there's a lot of boomers and there's a lot of millennials who use Facebook and will continue to use Facebook. So it's gonna be there for a while. Next up is GUI. GUI once again, max chart negative 18.22%. Dividends paid out so far $4.48. Similar once again to TSLY, and it's down negative 18.22%. I am also up on this as well. That's because I've been investing on the low end, so I'm up on this position currently personally. But once again, this is Google. Underlying is Google. Google's not going anywhere. Google always grows. It has a good balance sheet, a good amount of income coming in. It's not going anywhere. No matter what happens, recession or not, it's not going anywhere unless somehow Google disappears off the planet Earth. I think this is a great fund to have. Great fun to have in the YMAX fund, and therefore that's going into B tier as well. Now, we're going into some different ones. Some funds I personally don't own. This is DISO. DISO is down negative 20.10%. I've actually not been keeping track of DISO. That's pretty funny. Negative 20.10%. The dividends paid from DISO is 5.24%. Do I think DISO is worth having on this fund? Actually, I kind of do. Is it B tier? Is it A tier? Is it S tier? No, it's definitely a C tier fund. I think this should be on this fund, even though it doesn't deliver great on growth and great on yield. But I think it should be on this fund because it diversifies it the way we need it to be diversified, right? So we have a lot of tech stocks. We have a lot of social media stocks, some product stocks like Apple and Amazon. I guess is a product stock. They sell products. So I guess you could say that's a product stock. OARK is more of like a financial stock because it trades on ARK investments. But DISO is an entertainment stock. And, they create entertainment. They create, shows, movies, at Disneyland, all that jazz. So DISO is a great diversification in the YMAX funds in general. So I think DISO should be in the funds, but is definitely C tier because it just does not perform that well. But to be frank, it did perform. It was at 22.53. So it was technically in the positives, but currently it's just down. So at the moment, not a great performer. And also, I'm pretty sure they have like some bad news currently. So I don't see them performing well, maybe until a little while, until some stuff dies out or they have some management changes. Now, looking at CONY, another one that people love. People love CONY, but it's down negative 2.86% since inception, and it's paid out $18.52. $18.52 since, or annualized. And it's negative 2.86% down since inception. Okay. Again, people love CONY. I understand why they love CONY. These dividends are insane. But as you can see, the dividends are trending downwards. Could this be a fluke? Could it go back up? Could there be another bull run? Maybe. Am I betting on that? No. I don't bet on maybes. Of course, that's, what investing is. Everything's a maybe. But this is definitely not an A tier for me. It's definitely a B tier. And I know people are going to hate it because I put Nvidia into A tier and now I'm putting CONY into B tier. But first of all, Bitcoin's volatile. Bitcoin has bull runs and bear runs. And the bear runs are very, very long runs, as we could see previously. So if this bull run happens, great. Great profits, great returns on shares, growth on shares. Once the bear run starts and we go into the bear movements for Bitcoin, if it happens, because now we have ETFs, so who knows how Bitcoin will move now that we have ETFs. But if the bear movement happens again after a bull run, if we have a bull run, it's going to be a cold winter for CONY. CONY's going to go down. It might have a reverse split because Coinbase, the underlying, is based on crypto, on Coinbase, on Bitcoin, on Ethereum, on all these funds. So if crypto goes down, CONY will go down. Coinbase will go down, and with Coinbase, CONY will go down, and so will your dividends, and so will your value of shares. So CONY, B tier. I guess you could also call it a financial investment because Coinbase is like a finance platform and Bitcoin and all that stuff. So it's kind of good for diversification. You're getting yourself into Bitcoin as well a little bit. and not directly into it. You're going through a financial platform. But anyways, still a little bit risky for me, and I don't think it will last in the long term. Next up is MSFT, or MSFO, from Microsoft. And this, like I said, for Microsoft, and this one has returned 2.25%. And this one actually is a fund that a lot of people don't talk about. It's paid $5.56, and it's up on the max chart 2.25%, and that's on downtrend. Previously, it was up even higher. And this is a fund, like I said, people don't talk about. And honestly, this fund is another fund that I'm going to put in A tier. The reason I'm going to put in A tier, because this has long-term viability, just like Google, just like Apple. Of course, it's going in A tier because it's actually green. It pays higher dividends annually than Apple and Google. And just in general, it's Microsoft. Microsoft's not going anywhere. They have products. Google also has products, and Apple has products. But once again, Google, or GUI, and Apple are both in the red, and Google and Apple are trending downwards more than Microsoft. So Microsoft is technically performing better. But anyways, MSFT is MSFO is a great fund to have. Microsoft, the underlying, is a great investment, and therefore I'm putting it in A tier. The dividends are there. They're higher than Apple and GUI, and the returns are pretty good on the max chart. If it wasn't for this downturn that we had recently, due to the earnings seasons coming up, this would be a lot better. But A tier it is. I think MSFO definitely has a place. I was invested in this previously. I sold out of it. I regret it. Definitely something I want to get back into. Might get back into soon, because we are on the down, or on the lowest point right now. As you can see, we're down 2.25% on the max chart. So that means we're getting close to what inception price was, which is a good time to buy. So what else do we have? We have NVDY. NVDY is another fund that's on YMAX ETFs, and another fund I don't quite track, or I've never really messed around with, and is down negative 16.62%, and the dividends paid out annually $7.73. NVDY, I want to put C tier with this. So reason being, once again, entertainment and product. It's a great diversification in YMAX. It's entertainment, and it's a different form of entertainment. Or I guess, you could say it's a little different form of entertainment. It's more mainly streaming rather than TSLY that has streaming products and other stuff. It's a streaming product. That's all it offers. Good diversification, has good results. It's always going to be around. People are always going to watch movies, always going to watch shows, and they're always going to be paying someone, because some people just don't know you could get stuff for free. Not saying you should get stuff for free, because that's pirating, but just saying people don't know about that. They're willing to pay for Netflix. Some people just forget they have the membership as well, so the free money coming in for Netflix, or Netflix underlying. So Netflix is a good investment, but definitely going to be C tier for me. Now we have Zomo. I don't know how I remember all these fun names, but I do. Zomo down 15.60% and has paid dividends of $2.78. This fund is going in D tier. The reason it's going in D tier is because, well, the performance is terrible. Dividends is $2.78, and it's down 15.6%. Honestly, I was going to put it out of the fund, but it's pretty good on diversification. We don't have a lot of energy stocks in this ETF in general, so D tier it is. Diversification, once again, is what this fund is known for. So if you focus on the high yields and if they're all in the same category, that's not very diversified. So diversification, we have to have Zomo in this. Even though the yields are not that good, even though it is dropping in value on shares, we still need that diversification, so therefore we can have a good fund in general. Next up, JPMO. Of course, you might be asking why I'm going to click on some of these funds. Well, I'm not invested in them. I don't really track them. So in general, I don't really want to spend too much time on them. Now, JPMO. This fund, as we saw, is down 3.93%. It was up before on the max chart, and it's paid dividends of $3.59. This fund, I'm going to put in C tier. The reason I'm going to put in C tier is because the return on the max chart, as you can see, is not that bad. Negative 3.93% is not bad when you're returning 18.60% annually, and as well as returning $3.59. Meaning, technically, if you're owning this fund, you would be up. Especially if you're reinvesting, you would probably be up even more. So in general, this fund doesn't seem to be so bad, doesn't mean to be so shabby. And I'm putting it in C tier because it's also a way of diversification. It is a finance-based fund or a financial institution, so that's a pretty good thing to diversify into, especially for JP Morgan because it's such a great bank. I don't think JP Morgan's going anywhere, so therefore this would be a great thing to put into YMAX, the ETF, for further diversification and safety. Next up, AMD. So if we look at AMD, we can see that it's down negative 27.27%. This is obviously not NVIDIA. This is not NVIDIA. AMD is down. It seems like it can't compete with NVIDIA or Nvidia, the underlying, as well as, you know, it probably should be. I think AMD is a pretty good company, and as you can see, it's performing quite well, AMD, until it started trending downwards. But it's paid $9.28 in dividends, and it's down negative 27.27%. Sadly, this is going to be my first fund or ETF, I would say, to take out of the fund. The reason being, or actually, no, actually, I'm going to keep it out. I'm going to keep it out for now. I think this should not be in the fund for now. I think AMD currently is trending downwards because Nvidia is taking all the spotlight, obviously. But I think AMD should not be in the fund because AMD is just, it's a bad Nvidia. This is what is going to happen to Nvidia once the bubble dies. And I think currently we can feed off Nvidia. We have already a tech CPU, GPU stock, in Nvidia, in YMAX. So having AMD there is no point. You're just having another CPU, GPU company, and it's just a competitor, which is doing way worse than what we already have in the fund. So why even have it there? I understand they're trying to implement all the funds into one fund, but I think it's just bringing it down. It continues to go down, and there's no sight of it going up just yet while Nvidia has all the spotlight. Now, if Nvidia begins to go down, and of course AMD and AMD will probably go down with it, but if Nvidia goes down and people start selling out, they're going to start looking to put their money elsewhere. And of course, it's going to take a while. But once we get to the point of the bottom of even the AI bubble happens, like everybody says is going to happen, and I'm thinking it's going to happen. If that happens, if all these things happen, AMD will be a great place to put your money. The reason being is because, once again, it's a competitor. But at the moment, Nvidia, the competitor, is beating AMD. So nobody's putting money in AMD right now, the underlying. But if Nvidia goes down, people would want to put it to AMD because now this is a competitor that might do better than Nvidia, and it's also in the tech sector. But currently, it's F tier, shouldn't be in the fund. Get it out of here, put it back later if possible. I know it probably is. I don't know what the rules exactly, the laws are, but there's probably a way to take out funds and put them back in later. But AMD would be a great fund to be put in later. Once, all the Nvidia hype is over, we're back to normal markets, and then AMD might have a chance to come back. That's when you should throw it in. But why take all the negatives on the main fund when you can just wait for later times? Next up, we have PB. PP is a fund I've been looking at personally. I've mentioned this before in other videos. It has paid out a dividend of $5.60 and is down negative 20.40%. It is down negative 20.40% because they had a bad earnings and they've been going down recently. They've been having some issues, PayPal the underlying. But I think this fund deserves to be in C tier with JPMO for now. I think it has a lot of potential to go back up, and I think it will go back up sooner or later. And PP is something I'm looking to invest in, especially while it's down in its lows. And, in general, I'm probably going to be buying this next month, next 2 to 3 months. But PP has potential. Dividends are there. Dividends are definitely there. They're probably going to be lower, and they are going down lower because overall it seems like volatility has fallen on the underlying PayPal, and the value of PP has fallen as well. But I think there's a way for it to come back, and it probably will come back because it is a financial institution. They offer a lot of products, such as, of course, transacting money to other people. They have all the pay later products now. They have loans you can take out. So there's a lot of things you can do with PP. It's a financial institution. It's probably always going to be around, or it might even get acquired by some other company. So I think there's a lot of potentials for PayPal, the underlying, and therefore PP, the ETF. So it's going C tier for me. Now, we have SQY. SQY, I'm pretty sure, yes, SQY, I'm pretty sure it is. Yep, YieldMax ETF, trading on SQ. The dividends for this are $8.66, and it is down currently negative 10.25%. SQY, for me, once again, not something I track down much, and I think it's a little bit too much over diversification into the space of overall tech. So I'm going to put that in, negative 10.25%. I'm going to put it in D tier. I know the dividends are pretty good. Or actually, the dividends, 47.31%. Is it going down recently? Yeah. We'll put it in C tier. We'll put it in C tier. C tier it is. I think it's good there. Not much from it, but I think C tier is a good place to put it. Now, let's look at MRNY. MRNY. Pretty sure it is, right? MRNY. Yep. I'm getting it right. MRNY is down negative 25.36%, and the dividends are, why is it saying non-available? I'm not sure, but anyway, these are the dividends. They are all over the place. $2, $0.59, $1, 94 cents, 48 cents, all over the place. But in general, I think MRNY, or the Moderna ETF, deserves to be C tier. Or actually, no. C tier. The reason why, once again, diversification. It's a health ETF. We don't have a lot of health ETFs. So C tier it is for MRNY. Now we have another one, AIIY, right? I think that's right. No. Hold up. What's it called? AI. I forgot what it is. Hold up. Give me 1 second. Oh, is it not? Oh, AYYY. There you go. These names. AIYY. So looking at AYYY, dividends $5.22, and we are down 45.59%. Yeah. Doesn't look good. That's definitely going in F tier. Just in general, I think over diversified into that section of the market. Doesn't need to be on this fund. Get rid of it. It's down a lot. Dividends, okay, sure. The dividends are like $5.22. That's nothing impressive, but it also hasn't been around for too long. But I don't know. I don't think we need this in the fund. Personally, I don't think we need it. I don't think anybody wants it. Well, how many shares are there outstanding? There's $38.85 million in assets. Not a lot of people are invested into it. Just get rid of it. Honestly, just get rid of it. MSTY, another one. People love MSTY. Again, people love MSTY. Up 46.76%. And the dividends are pretty high, $12.01. But once again, MSTY. I don't know, man. I'm gonna piss some people off again. I'm gonna piss a lot of people off. If you guys don't know what MSTY is, MSTY is MSTR, and I'm on a different screen. Give me 1 second. I'll pop back in a second. MSTR is MSTY, or MSTY's underlying, and MicroStrategy. What is MicroStrategy? Well, MicroStrategy is known for having the biggest amount of Bitcoin. I'm pretty sure it is. They also work on like artificial intelligence, something like that. Yeah, I'm pretty sure it's like artificial intelligence. But I'm pretty sure they own like the most amount of Bitcoin, something like that. That's right. Right? Isn't that what their thing is? Don't they have like a lot of Bitcoin? Yeah, they have like $25,000 in Bitcoin. Yeah. Okay, there you go. But they do like AI stuff, tech, something like that. A lot of people love them. I understand why. You know what I mean? They're paying $12.01. But look at this, $4, 2.5, 3, now 2.3. There's a trend downwards. You can see that trend downwards. And I'm sure, it's up 46.81%. So if you bought an inception, technically you're up. So all good for you for now. You could take those dividends out and then, sell your shares and you're good and dandy. But once again, we already have CONY. We have YBIT coming up as well. We have SQ. I don't know if SQ owns any Bitcoin. They probably do. I wouldn't doubt it. I know OARK Investments probably has a little bit in Bitcoin as well. But in general, I don't think we need another AI company. And I don't think we need another Bitcoin fund or ETF-based ETF. That's something that owns $25,000, 25,000 Bitcoin. So I'm going to piss everybody off. B tier. I said it. It's going to be tier. It's going B tier. Okay? Or sorry, not even B tier. F tier. Get it out of the fund. We don't need it. I know for a fact this is not going to do well. $12.01. Sure, it's nice and dandy in the beginning. This fund's not going to do well. As soon as MSTR has a bad time, which is when Bitcoin drops, because you can see this is is it around the bit? Yeah, if you look at, let's see, 6 month time. Let's look at Bitcoin. Live analysis. Yeah, look at this. So you have a Bitcoin running up in February, and MSTR ran up with it. So, you know, I definitely don't see anything wrong with this. You know, I'm just saying, you know, not to be a hater on if you're investing in MSTY, but there's something wrong with MSTR running up like this, and then Bitcoin running up like this, you know? It's a little bit too close for comfort for me. So that's why I'm putting it F tier. Too much Bitcoin. Enough with the Bitcoin. We don't need Bitcoin. We don't need that much Bitcoin. We have YBIT. I trust YBIT a little bit more than MSTR. And I don't know how I feel about YBIT. We'll check it out in a second. But next up is GDXY. Pretty sure that's what it's called. GDXY. GDXY. Let's see it. So GDXY is up or down 5.33%. They have one dividend payment of $79.59. It's a brand new fund. And we don't know where it's going to go. It could go up. It could go down. Looking at GDX, if we take a look at GDX, we can see that overall year-to-date, 5-year, it stays balanced. It's up 37.23%, but overall it's balanced. 19.64% in the past year. The volatility is probably decent on it. Not that high because I think gold, so I don't know, not that great, but I think it's like a leverage ETF. Oh no, it's just a gold miners ETF. But GDXY for me, honestly, and people are gonna hate this. They're gonna go, why? I want to piss off so many people with this video. I want to piss off so many people. But GDXY for me, S tier. I know. Why S tier? Well, first of all, it's gold. It's gold miners. Okay? Look at this. 5-year, we can look at the max. Okay, sure, we had times where it was higher. This is like 2011. I'm pretty sure like this. Yeah, it's after the housing crisis we had in 2008. It ran up because, you know, everybody was freaking out. But overall, gold miners perform well. Gold performs well. Gold is a great place to hold money if you're just trying to, you know, beat inflation, because it goes up with inflation majority of the time. And if you're a gold miner, you're profiting from gold going up with inflation. You always have a supply unless supply runs out or some, you know, whatever. But gold miner is good. Gold is good, and it's always going to be around. It holds pretty well on the 5-year, even on the max. Even after we had the drop from 2013, from the 2008 times, we still held up well for a good amount of time. So personally, I think it's going to be a great fund if they continue to pay out dividends like this. You know, I think it'll be a great fund. Honestly, I think it's going to be a great fund. GDXY, I'm personally looking to invest it into soon. I don't know when. Of course, it's brand new. Let's see on the 5-day. It's brand new. It's experiencing some lows. I don't know if I'll go in. Maybe I will. Maybe I won't. But GDXY is definitely S tier. It's going to be around for a while. Gold's never going to go anywhere. And a gold ETF or a gold miner ETF is not going to go anywhere. Gold companies or gold mining companies are not going anywhere. You're always going to need gold. Gold's everywhere. Not only jewelry. It's in electronics. Unless they find something else to use. But gold is good. Gold will be around. Therefore, I am S tier with GDXY. And we're going to switch it up a little bit as well and put some other stuff in S tier. But let's look at Snow. Wait, hold. Give me one sec. Is it Snowy? What is it? A Snowy, yeah. Snowy with a Y. Snowy with a Y. So the Snowy, or underlying Snow, is down negative 6.21%. Dividend, 93 cents. What is Snow again? Like I said, some of the stuff I just don't pay attention to. Snow. So Snow is Snow's American cloud computing based database. Blah 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 blah. Okay. So it's some kind of computing thing. Snowflake Inc. stuff. What does it do? It provides a cloud-based platform for data storage, integration, and analytics. AI data cloud. Hey, give me one sec. Snow stock. 5 year. Yeah. I don't know about this one. It's another AI company. It's brand new. Well, the ETF is down 3.87% already. Paid 93 cents. Nah, let's go on F tier. Let's go on F tier. And I'll tell you why it's going F tier, because it's AI. Stop with the AI. It's a server company. It's nothing else. It's just a server company. And what's a server company gonna do? Okay, keep storage. I understand that like storage is important, stuff like that. But look, it's been trending downwards. 5 years down 47.67%. You know what I mean? Like it's down. It's not really doing that well. So I don't know. It might turn around. Maybe ETF, the YieldMax ETF fund managers know more than I do. Probably do. But maybe they have a better lookout on Snow ETF or Snow stock. But for me personally, get that out of the fund, man. It's another AI fund. We don't need that much AI. We don't need that much AI. Last but not least, YBIT. Looking at YBIT, $1.21, $1.37. Overview, down 18.02%. Why? Because Bitcoin is down recently. That's why. But looking at YBIT is, of course, Bitcoin-based ETF. And you guys know how I feel about Bitcoin. But YBIT, it trades on Bitcoin. Doesn't trade on a company. Well, technically I should treat them the same. I can't be like weird to MSTY because it holds a lot of Bitcoin when literally YBIT just trades on Bitcoin. But I don't know. I feel like Bitcoin or YBIT I would like more than MSTY. Because MSTY is like what, AI? Stuff like that. You know? YBIT's going D tier. YBIT's going D tier. Just because I like trading directly on Bitcoin better than trading on MSTY or MSTR, which holds Bitcoin. What's better? A company that holds Bitcoin or Bitcoin itself? I'd rather trade on Bitcoin itself. Then, I'm pretty sure it trades on a Bitcoin ETF, which is even better. So Bitcoin ETF, then a company that holds Bitcoin. It's the same thing with CONY. Like I said, CONY holds Bitcoin, holds other funds, but that's the thing. CONY holds other, other stuff. It holds not only Bitcoin, it holds Ethereum, all the Dogecoin, all that other stuff. So it's diversified, and also it has money coming in from financial transactions as well. But that's not a full list. I want to move some stuff around. What I'm moving around. MSFO, S tier. Let's see. AMZ, S tier. Reason being, Amazon products always going to be around, developing new products such as pharmaceutical company. They're moving into pharmaceuticals, internet-based. They want to launch their own internet, movies, shows, all that jazz, products themselves. So AMZ, S tier. MSFO, S tier, because Microsoft has products, Microsoft has subscriptions, all that jazz. Apple's probably going to stay in B tier, and Google's probably going to stay B tier for now. Phoebe, B tier is okay. This so B tier, and Fleet. Actually, let's move JPMO to B tier. Dividends are not that good, but the fund has performed quite well on holding its value, and I think it's a great way to diversify. So, let's see. Anything else? I think we're good. I honestly think this is a good layout. I know I'm probably going to piss a lot of people off putting Nvidia in A tier and telling people that MSTY shouldn't be in the fund and CONY in B tier. But this is how I see it. The reason I put GDXY, MSFT, and AMZ in S tier is because gold's always going to be around. Microsoft's always going to be around. And AMZ is going to be around. Gold is gold. Gold's not going anywhere. Microsoft is a Microsoft. It literally controls everything. Microsoft, I'm pretty sure we just had the issue with Microsoft. So Microsoft has a lot of play has a lot of stuff everywhere. They're invested in everything. Everybody uses Microsoft for their computers, for all this stuff, all that jazz, all these products. It's everywhere. Amazon, people are going to always be buying stuff. Nobody's going to be beating Amazon anytime soon. Probably, unless Alibaba begins to beat Amazon, which I doubt it. But Amazon's always going to be around. People are always going to buy stuff. It's just how the world works. People just love buying stuff. And they're going to buy Amazon. They're going to buy Amazon Internet. They're going to buy Amazon Pharmaceuticals. They're going to buy everything Amazon, right? They're going to watch all the Amazon shows, all the Amazon subscriptions. Amazon, right? Tesla in A tier, because Tesla has a potential with AI, and in general, their cars are winning the electric market. They're beating everyone. I don't care what you say. If you don't think Tesla's an AI company and you don't think Tesla's good as a car company, they are literally beating the electric market. Unless someone decides to switch to hydrogen and just out of the spoon where everybody goes to hydrogen, Tesla is winning. Nobody's beating Tesla, at least in the European and American market. BYD is in China. BYD is not coming out of China. Nobody's beating Tesla. Okay? A tier. NVIDIA, A tier for now. For now. Dividends are high, returns are higher on shares, but I think it's going to go down soon. So for now, NVIDIA, A tier. Apple, B tier, because of course, Apple, brand name, good name, always going to be Apple products, always going to be Apple phones. Everybody's going to Apple, buy Apple, right? Phoebe, once again, Facebook, boomers, millennials, love Facebook, love using it, always going to be around. Google or GUI, Google's always going to be around. You're always going to have to do Google searches, not going anywhere. All their products are going to stay. YouTube, Google, everything's Google, right? We know Google. It's always going to stay. CONY, Coinbase, I put in B tier because I don't know how long it'll last on the long term. Once again, Bitcoin, I think it's going to be good because it is a financial product in a sense. It makes money financially, not only through its Bitcoin and ETF investments. I think CONY will be, or Coinbase will be around for a while, and therefore CONY could be B tier. It might drop to C or D depending on how Bitcoin performs. JPMO, once again, always going to be around. Dividends are okay, but it holds its share value. It does pretty well. JP Morgan's not going anywhere, so B tier. DISO, C tier. DISO, C tier because, once again, entertainment, good diversification. Might not be the best performer for now, but the dividends are okay. Performance is not that good, but diversification is key. TSLY or Netflix, once again, entertainment, diversification. People love shows. They'll continue to subscribe to Netflix, and if they don't want shows, they'll forget they even have the subscription. PP, financial institution, might be down now, PayPal, but it'll come back around. That's why it's going in C tier. SQ or SQY, Square, don't know much about it. Honestly, D tier. I don't think it deserves to even be on the fund, but we'll keep it D tier. Because honestly, I think we have too much tech, and but I'll leave it in D tier. We'll move it down to D tier. The reason for that is just I don't know enough about it. I think it's too new, and just in general, I don't know. I think we have too much tech in this fund. But then we have Moderna or MRNY. Once again, diversification, health stock, health stock, pharmaceutical stock. And therefore good diversification, good returns. Health pharmaceutical will always do good. Moderna will always have new stuff coming out for new issues that might occur, another COVID or something, who knows. OARK is just pretty much Tesla. Most of their holdings are Tesla, but once again, it's a financial based company or underlying, so we can keep it. Zomo, diversification, gas, it might be dying out soon, who knows, we'll see where that ends up. But overall, we'll keep it on the fund just for diversification case. Then we have YBIT or Bitcoin. Like I said, I did take out MSTY for Bitcoin, but we'll keep YBIT because it's a Bitcoin ETF trade, so we're keeping it there. I want it there. I trust Bitcoin ETF than a company holding Bitcoin. SQ, like I said before, D tier. AMD, out of the fund for now. It's out of the fund for now just because Nvidia is doing so well and it's a competitor, and I think at the moment it's just going to bring the fund down, to bring YMAX down with it because it just can't perform or outperform Nvidia. AIYY, with flying around, AIYY should be out of the fund. Too much AI. I'm done with AI. Stop with the AI stuff. Too much tech, too much AI. Get out of here. MSTY, once again, Bitcoin, company holding Bitcoin. Why do we need that? I don't get it. And then we have Snowy. Again, I think it's another AI company, server company. Why so much tech? Why so much tech? YMAX, YieldMax, why so much tech? Give us some other stuff. GDXY was so good. Airbnb so good. And you're diversifying. You're giving us new stuff. Too much tech. Too much AI. Get out of here. But overall, that's the fun of YMAX. Those are the funds that are in YMAX. And yeah, that's just what I think about it. That's what I think about the funds. Get the four on the bottom out of there. Bring them back in later if they perform well. But currently, I don't know. That's me. You could disagree. I know a lot of people disagree with a lot of my choices, but yeah, over diversified, man. Over diversified into tech. Too much tech. Too much AI. Get out of here. We don't need that much. I know it has a lot of volatility. Bitcoin and tech and AI has a lot of volatility and a lot of money to be made, but we don't need it. We don't need that much. We do not need that much. But thank you anyways for watching. I'll see you guys in the next video. I know this one's a little bit long, but it's just my honest opinion on YieldMax ETF, YMAX, and why it's over diversified into some sections rather than the others, and what funds could be taken out, and what my ratings are on the general funds in YieldMax, and even maybe YieldMax ETFs in general, because these are most of the funds that YieldMax has. But thank you so much everybody for watching, and I'll see you guys in the next video.